welcome to this month's Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's Fintech and finreg news. Now, the first news item of note, I would say, particularly in the EU, has been the passing and approval of the markets in crypto assets regulation. It's been through the hurdles at the EU level when it comes to the Lamfalussy process, harder to say than you would expect, where the EU members of Parliament, the Council, and the Commission have all read through the text and agreed on various aspects of it. So the level 1 text has gone through the process. Obviously, we're going to have the regulatory technical standards and everything else to follow as normal as when it comes to directives and regulations. So we're going to also be seeing some interesting discussions about who will be in charge of enforcing some of the aspects of MiCA, as it's known. There's been somewhat of a discussion, a turf war between the European Central Bank and ESMA around the types of crypto assets that would fall under either's purview. So expect that to be a developing discussion throughout the next few months, going into September, I would expect, and beyond potentially. Now in the US, we have similar discussions continuing. I think I discussed this last month, between the SEC, the CFTC, the OCC, all of the other regulators in the US with regards to who should be in charge or best placed to regulate crypto assets in that market. Now, Gary Gensler interestingly said last month in June that Bitcoin should fall under the purview of the CFTC, as it is one of the only crypto assets that would be categorized as a commodity. So Bitcoin, it seems, is not as contentious as some of the other digital assets that have emerged over the years. Now, we're obviously going through crypto winter, or continuing crypto winter at the moment. So there have been some interesting developments. There's been a lot of enforcement action by both the CFTC and the SEC around Ponzi-like schemes with regards to crypto as well. So crypto has been top of mind for everyone in finreg over the last 6 months to a year. So I don't expect that to go away in the coming months at all. The EU is also pushing very hard on its new innovation agenda. Just at the start of July, we've seen a publication by the European Commission, communique in fact, going out to all of the EU level bodies, talking about its own innovation agenda, or the EU level innovation agenda, referencing the CHIPS Act, the European CHIPS Act that's been proposed, talking a lot about some of the ESG developments in the region, looking at how to try and use the industrial base that Europe has and work with fintechs out there to try and improve and develop strong partnerships with the industry and areas like fintech. So certainly we're seeing a lot of focus, and they're talking about deep technology innovation. That's what they're referencing there with regards to not just software but hardware developments in the EU, and they want to be able to champion the region as somewhere where there'll be a lot of technology focus in the future, particularly when it comes to sustainable technology development. However, obviously, at the moment, we're facing the prospect of a recession across the EU and across the globe, for that matter. So how that will marry together will be interesting to see as well, with regards to the sort of political agenda and trying to mitigate the impact of the recession on financial markets as well. Another big topic throughout the last couple of years has been big tech and the increasing dependence of financial markets, financial institutions, financial market infrastructures on big techs, namely Google, Amazon, Microsoft Azure. Some of the large ones in the Asian region as well have been mentioned. The Bank for International Settlements put out a paper at the start of this month examining and exploring the increasing influence of big techs. They are recommending that further regulation be introduced to focus on these providers at an international level. Now, obviously, international regulation is never easy to come together. Obviously, you've got to get all of the different jurisdictions on the same page as each other, but certainly there is a lot of concern, particularly at the EU level and the US and in some countries in Asia about the systemic risk that may be posed by cloud providers, for example. So certainly we've had a lot of discussions amongst regulators, generally in their sort of own regional areas rather than internationally, but certainly we can expect to see much more focus on this going forward, particularly because even with regional big techs, there's dependencies on the large, in multinational big techs. So what happens if there's some disruptions at the big tech level? What could happen to the economy? What could happen to the performance of the markets and the resilience of the markets? Is an increasing focus on systemic vulnerability. So again, DORA, the Digital Operational Resilience Act, has some aspects of this. There's been some papers from the EU level already on cloud. We can expect to see much more focus and investigation across all of the different jurisdictions on the big tech aspect of this as well, because obviously some of them act as financial institutions in various markets as well. So interesting topics from the fintech and the finreg perspective there too. On the topic of ESG, we also saw the publication of ESMA's review of the ESG ratings research providers out in the market. So what's interesting to see there, there's a lot of non-EU based providers that dominate that market again. The definitive number of providers, according to ESMA at the EU level across all of the markets, is 59. So that's quite a lot of different providers that they've identified from the 154 responses to their call for evidence that they asked from the industry. So they looked at a lot of different providers out there, but most firms are using 2 or 3, and most are using some of the large providers. So, and the largest providers in the market are MSCI, Morningstar and Sustainalytics, ISS, S&P, Moody's, then Refinitiv, and then we've got a long tail of other providers out there as well. So there's a significant number of providers, but the larger ones tend to dominate. However, from the findings of ESMA, there's a lot of dissatisfaction with the methodological transparency of these providers. Ratings providers aren't being transparent enough. They're not being transparent even on the data sourcing behind those methodologies either. So there's a lot of room for improvement, let me put it that way, from the perspective of the regulators. So expect that to be another ongoing topic, and it will have a huge impact on all of the fintechs servicing that market, as well as the ratings providers themselves as they adapt their models and change the way that they calculate different things and provide the underlying data too. And amusingly, I think one thing to see from the SEC in June was that they updated some of their requirements for filing of certain documents by institutional investors, advisors, all of the financial market participants, and they can now file in electronic format. Welcome to the 20th century, folks. So certainly there's been slow progress with regards to many countries post-pandemic. We seem to have reverted in some markets to going back to paper-based filing formats, but hopefully progress will happen as the SEC has made it into the 20th century. Hopefully the 21st century is beckoning, and we'll see much more progress across the globe on that topic too. And of my final thoughts for the month, there was a lot of discussion at one of the events. It's been a busy event season for me. I've been at nearly everything over the last few weeks, it feels like, including lots of award ceremonies, which has been great to see lots of you out there. But certainly one of the interesting discussions that we had at a hedge fund event I went to was around proof of concepts and how vendors should work with their clients and vice versa to deliver a successful proof of concept. Now, there's a lot more work going on around innovation, a lot of data trials and things going on, particularly with things like ESG, as I mentioned earlier. So POCs are rife and they're everywhere, but one of the biggest challenges is getting enough internal resources set aside in terms of people and their time to be able to help those making the selections to pick the best option. Now, treating one of these things like a proper project, a full-blown project with regards to responsibilities, some degree of governance and oversight with regards to the successful delivery of the POC is probably the best way to go about it, to ensure that you have dedicated resources on the business side, in particular with very busy executives. We're coming up towards the summer season too, so people will be heading off, but certainly ahead before that happens, I think it's interesting to see POCs being scraped in at the last minute at the moment. A lot of people trying to trial data and things ahead of people disappearing off in July and August, but at the latter end of July, I should say. So when it comes to POCs, obviously, you need to think about a lot of different moving parts. You want as much transparency from the vendor as possible. You also want to be realistic about what that technology can achieve. In terms of setting expectations on the side of your business users. So this is particularly interesting when it comes to next generation technologies, where there's a lot of hype, and it's very hard to sift through the hype and the reality of what you can deliver, particularly with things like AI. So generally, I think being open, transparent, and setting very clear, tangible aims for the POC and delivery expectations for the vendor, if they're building something for you, if it's to do with the data, if you're trialing data, making sure that everybody that needs access to that data has access to that data in the required timeframes and knows what they have to do with the data, to be able to get back to you and say whether it's a yay or a nay in terms of rolling it out. Because the last thing you really want is for a free trial to expire and you not to have been able to work out whether the data source is exactly what you want. And then have to go through the process of renegotiating with your vendor, which can be painful, and it can, for that matter, impact the long-term relationship with that vendor and the amount of leverage you may have during negotiations. So a few words of wisdom, some food for thought for anyone going through a POC. And I will speak to you again next month.